Hello everyone, I hope your studies are going good and you are all set for your May 24 exams. Now there are two new theory topics which is on technology and ethics in your CA Final FR syllabus. In terms of exam weightage, if you look at even the MTPs, that carries around a 6-mark weightage, maybe 4 marks for the ethics, a descriptive question is expected, and 2 marks on technology which is an MCQ, or maybe even a 4 short descriptive question is possible. So 6 to 8 marks is what we see. Very scoring. So in today's video, what we have done is we have tried to first we will do a very super quick revision. For detailed videos, I hope you have referred earlier. We have shared that on the Google Drive, etc. So you can refer this for a quick revision. We will also discuss the questions, and very importantly, I will share with you a standard format, standard steps that you can write for a descriptive question in an ethics or in a typical technology type question. So just quickly glance through this and hopefully this should help. So this is on your ethics and technology. So we'll quickly start. Let us say we first go to the technology part. Again, we'll quickly review this. In the beginning, you have some literature regarding the history and evolution of accounting. So first you had accounting only for tax purposes, then the double entry system of accounting was introduced, and then you have the Industrial Revolution, which gave birth to the ICAS, the Scotland Institute, in 1854. After that you have the Industrial Revolution, which has a lot of which had a lot of computers, etc. being used, and after that you have the emerging technologies which use things like cloud computing, artificial intelligence, etc. Now, a very important thing over here, in my opinion, is the automation processes. So there are 4 things over here which can come as a note. One is regarding automation processes, cloud computing, something regarding ERP, or then the emerging technologies like blockchain and artificial intelligence. We'll do a very quick discussion. What is automation processes? You are trying to automate the process, like a front end or a back end process. In case of a store, you're using technology to automate those processes. The benefits and challenges over here are broadly standardized for almost everything, whether you look at AI, whether you look at blockchain, whether you look at cloud computing, or even automation processes. Broadly, the benefits would come in the form of streamlining data entry. So it is a lot more easier to streamline data entry. You will get access to real-time information. You will be in a position to make better and more informed decisions. Will be able to do better forecasting, etc. So these are generally the standard benefits in each of them. And the challenges also, generally the standard challenges for each of them would include something like cyber security threat, like hacking, for example, loss of data. Second is the possibility of potential job losses, and third is the data integrity. So what happens in case of a leakage of data, and last is internet connectivity. So probably you can recycle some of this information here or there and come up with a short note in case benefits or challenges are asked. So as you can see over here, the challenges are training, education, breaches, potential losses, etc. A key term over here can be something like robotic process automation, where you are using bots for the purpose of consolidation or for the purpose of, let us say, query solving, etc. So that is RPA. Then there is cloud computing, where you use access to the cloud, like a Google Drive is a very simple example of cloud, where you can use this for the purpose of better processes. Like cloud computing was really helpful, at least in era of COVID, where people had to work from home and they could use these shared resources. A lot of applications of cloud computing can be like cloud storage, like something like a Google Drive, software as a service, infrastructure platforms, which you can use as a service by just using or accessing them from the cloud. The biggest advantage of cloud is you don't have to make that front end investment in a huge amount of technology. You can use access to, let us say, some softwares or platforms through the cloud, and you can pay it as and when and whatever is required. It is a lot more easier to scale. If you need more, you can take the premium products, and that is a lot more easier to scale up. The challenge over here would be the access to internet and exposure to hacking. If you don't have internet access, it would be very difficult to use the cloud computing applications. Next, you have cyber security. The risk over here, at least in financial reporting, would be unauthorized access to financial data, and you can make modifications before or even after management approval. Now, for that, you have a regulatory framework in the form of the IT Act of 2000, which can be used for the purpose of mitigating risk. And the consequences over here the entity may have a reputational damage, and even a financial damage can be suffered over here. So various cyber security threats, the common threats, we have a mnemonic over here, PM RIDS. PM would be P for phishing, which is sending you clickbaits where you click and probably it takes you to an unauthorized access base. Malware, like a Trojan horse or a virus which is infused into your system. PM, phishing malware. RIDS, R would be ransomware, where your files are locked and you are asked for a ransom. Insiders, I, which is in the form of employees who can leak the data. D is denial of service, where you kind of overwhelm the server by so many access at the same point that it kind of hangs. And then supply chain, where you are compromising a third party software which can get access to your system. These are the threats, and what are the mitigation measures you can take. Over here you have PAIN, PAIN. So first is passport, sorry, not passport, we are not traveling. So password management. So over here strong passwords are a must. Then you have A would mean access control. You give access only to the required people. I is the incident response plan. What happens in case there is a cyber security attack? What are the steps that the people should follow? Like you do fire drills for a physical fire. What will happen if there was a cyber security attack? N would be network security, like you build systems like firewalls. E would be encryption, which is used, and then is employee training. Okay, then you have something like an enterprise resource planning, ERP software, something like SAP, which is used in the organizations. The primary objective of this is to kind of have all these day-to-day management activities, and they're not stored at 50 different terminals. You have one single server or terminal where everything is updated, so that managers can get access to real-time data, real-time information. The important thing of an ERP is the existing of a schema, which is a single data structure and a common database where everything gets saved, so that you can do a real-time access of the things that you need. It will help in a much more stronger workflow, process flow, and a flow of data between let us say various users. You should try to remember a few keywords, right? So you have things like schema, you have single common database, process flow, workflow, real-time access of data. So I mean, you are quite talented in that ways to kind of manufacture an answer, even if you kind of know a few keywords. So focus on remembering them. ERP is kind of cloud-based, and it can also have embedded AI applications which can make it a lot more dynamic. So over here for ERP, the benefits as well as a process flow or how it works, the benefits of ERP would be it will help in better business insights, better reducing the operating cost, better collaboration, getting access to real-time data, enhancing decision making, etc. The process flow over here is you will have a standard data structure so that information is updated as well as accessible real time, and you will try to integrate even third-party applications for ensuring a seamless data flow. Okay, then you have something called as internal control over financial reporting with ERP, so that is ICOFR. Now there are close to 15 steps that are mentioned over here on how do you enhance better internal control over the financial reporting processes. We have tried to summarize that. So if a question comes on internal control for an entity to manage internal control, what are the 6 things? So there is question number 1, if you go to see over here in your material, where in your, so I'm taking the same institute material, I've kept it the same, but I'm just probably trying to help you with the process flow. So when you look at question number 1 over here, you will have a lot of things that are close to 26 points. You will kind of fall asleep even just reading the question. So in the exam you will not have all of this, but you might be given a few of the points, and you would be just told that provide an illustrative steps for financial closing and reporting. So if I'm using an ERP setup, what are the broad, there are 15 steps, but what are the broad things that you should remember for setting up an internal control over financial reporting? So what we have tried to do is we have tried to summarize these types of questions into 6 things. So if you have an ICOFR type of a question where there are 15 steps, again this will come for around maybe 4 marks, and hence you don't have to reproduce the entire 15 steps. So even if you have the broad understanding, so what do you need to do? First is the requirements and deadlines. So in your financial reporting system, what are the requirements and what are the time frames or deadlines? Like you need TDS data, GST data by a particular date. You mention that into your system so that the data can the system can throw out data before the relevant dates. Second is if there is a change, how do you manage the changes? Very important. What are the if for internal control, what are the approvals, what is the hierarchy to be followed for a particular change to be done in the entry inside the system. So change management is very important for an internal control setup. Third is the individuals who are accessing the system, are they competent enough? Otherwise they will feed in wrong data in the system, which will become a problem. So you will look at the competence of the individuals. Fourth, you will have to define rules on what will happen, and if there are certain exceptions that have to be followed, and what if there are certain non-routine transactions, so alternative accounting treatments in case you are deviating from the rules, and what if there are certain non-routine events or transactions, what should be the process that the system should follow for the same. And lastly, to prevent backdating, you will have a time locking or a time restrictions, like your accounts get freezed for a particular year, so people cannot change it. So 6 broad things that you need to remember for an ICOFR question. First is understanding the requirements and the deadlines. Second is change management. Third is figuring out whether the individuals are competent. Fourth is you will have your alternative accounting treatments in case of deviation from rules. Fifth is what happens in case of a non-routine event or a transaction. And sixth, ensuring that entries are passed in the right time, and even after that there is a time locking so that people cannot backdate and change their accounts. So this can be used as a base, let us say, for questions like one which you might have referred. Okay, next you are looking at the certain future aspects when it comes to technology in accounting. Two very important things. One is blockchain, artificial intelligence, especially AI is a buzzword in today's environment, and hence if institute were to ask you a question, asking a theory based question on AI should be on the institute's cards. So over here, when you look at blockchain, what is blockchain? Blockchain is nothing but, in simplistically, it is a distributed ledger. So over here, like Google, Facebook, etc. have a centralized system. Blockchain operates on a much more decentralized. So there would be the users, and they have a mechanism for verifying the data. So that is called as a consensus mechanism, whereby if an entry is posted into the system, so there will be a chain of blocks. Every transaction represents a block. And if there is a real estate transaction, if you have sold a property, then that property gets sold, then that property gets sold, a new block gets created. And the most important feature of a blockchain is that these are uneditable, in the sense, once a block is added into the chain, it is virtually impossible to kind of change that. And as a result, it kind of gives a tamper proof, modification proof system. And if a blockchain is used, you may not need intermediaries like banks, etc., or registrars, etc., to verify a particular transaction. So when you look at blockchain, the buzzwords over here would be decentralized, it's a transparent ledger, decentralized and transparent ledger, distributed network with multiple participants, eliminates intermediaries like registrars or banks, and enhances data integrity. So this is for blockchain. A few examples of applications can be used in supply chain, audit of banks, etc. And then is impact on financial reporting. So the keyword or the mnemonic over here would be scared. Okay, so scared over here would mean, S would mean simplified reconciliation. It is a lot more easier for an auditor to reconcile. Again, streamlined audit processes. So for I don't have to keep on asking for data. I can actually look at the trail of transactions and come to a conclusion much more easily. Cost reduction, you don't need intermediaries, etc. In fact, there may be a date where auditors may not be needed. So that ways it can help in cost reduction. Enhanced audit trail, real-time financial reporting. So I don't need to wait for a debtor to give me confirmation. I can look at the blockchain and you can see. So it gives you a much more real-time access. And you have enhanced security and improved data integrity. So over here, these you can kind of remember in case the question comes on blockchain along with its impact on financial reporting. So you use a few keywords like decentralized system, transparent ledger, which is tamper proof, eliminates intermediaries, improves data integrity, etc. And you can actually show the impact of financial reporting using these points. The key application of blockchain is the Bitcoin, which is based on the blockchain technology only. Artificial intelligence, that is AI over here, is quite important. It tries to simulate, that is mimic, human intelligence into a machine. Technologies like machine learning, etc. are used for the purpose of artificial intelligence. It analyzes a large amount of data, like you see what ChatGPT does, and makes predictions or gives you outputs based on what you need, and also if required based on future trends. It enables computers to learn tasks which are earlier repetitive tasks which were done by humans. The opportunity over here is there would be new business models, and there will be a rise of services which use these technologies, and a lot of application examples regarding artificial intelligence are given. So over here, the artificial intelligence benefits would be something like FAT. FAT would mean financial forecasting, fraud detection. A would be automated data entry and accounting automation, and T would be tax compliance, which becomes a lot more easier and faster. The challenges, similar challenges, security concerns, technical complexity, employees have to be trained, etc. Everything remaining similar. The impact of Ind AS on information technology. So when you look at IT, information technology, and Ind AS, you can use and integrate the two, whereby you can try to devise a system where you are kind of automating that the decisions that a human were to take, you feed into the system and the system can be taking. If you don't have those AI etc. processes in place, you can even use Excel, Google Sheets etc. for the purpose of integrating Ind AS into your and technology into your framework. So this is your basic thing. You can see validation can be done even after report generation using Excel, or you kind of configure the Ind AS rules into a particular system for evaluating a particular set of transactions. So this is the broad theory, and we will go to the questions. The first question we have kind of broadly discussed, question number 1. Question number 2 is kind of a generic question. Again, as I said, I want to complete this in the least amount of time considering your exams are overhead. So we're just going to have a broad discussion rather than reading and understanding and explaining each question. What are the standard templates etc. that you should follow while answering? If you see the second question, what is happening over here is there is a manufacturing company which is applying Ind AS 2, and it has decided on an ERP system for an inventory management, and it also aims to integrate ICO OFR controls. So what is the things, what are the steps you should do if the company can afford or cannot afford inventory management ERP system? So first, if there is an ERP system for inventory management, if there is, then you will first develop a process. You will define that what is the process flow, like when materials are purchased, there would be a bill of material etc. that is needed. Then for inventory management, you will have to define processes for the material cost, but inventory also includes labor. So how do you include the labor cost? So you will have to track the materials, then track the labor. Overhead, what should be the absorption rate, how should the overheads be absorbed, and then integrated with the general ledger, so that once physical inventory verification happens, how do you kind of track that? So this is generic. If there is again integration of ICOFR in the ERP system, you can use various technologies, segregate duties, provide access control, use workflow approval processes, utilize barcodes, periodic physical inventory etc. It's a huge answer. I don't see a question like this directly landing up in your exam. And if there is no ERP, then you will use probably things like Excel, but then the process flow would still be the same. You will export the relevant data, organize it, use formulas for the purpose of calculation, and then determine the labor rate to be used, the overheads rate to be used, the total cost per unit to be calculated etc., and compare it with the physical inventory count. Now these are the first 2 questions. The other 2 questions, other 4 questions, at least in your study material, are automation process related questions. So these questions, if you see, whether it is question 3, 4, 5, this question is exactly similar to what you would have studied in one of the financial instrument questions, where there are 3 contracts. And in these 3 contracts, you have to figure out whether it is something where net settlement is happening, where you are following Ind AS 109, or it's a own use exemption, in which case the respective accounting standard applies. So how will you use technology over here? Or in the second question, where an entity is providing broadband services, voice call services, installing modem etc. So in this case, identifying how many performance obligations are there and whether they are distinct or not. So in question number 3, a system has to know whether there is a gross settlement, net settlement. Is it ultimately going to go as a commodity derivative? Is it going to go for own use? Here you are going to figure out rules for whether it is distinct or not distinct, and accordingly ultimately solve. I'll give you a standard answer flow for each of them. I'm just discussing the question so that you are broadly aware rather than reading it one by one and investing a lot of time. In question number 5, it is again exactly similar to a segment reporting question that you have, where there were 3 segments, or there were 3 routes. One is a local bus route, route, one is an intercity route, and one is like contract hiring for schools, etc. So to figure out whether these are different operating segments or not, can they be aggregated or do they have to be shown separately, the system should know the necessary rules. And the last question over here would involve a company who is selling goods in a new market where money may not be collected. So can I start revenue recognition framework? When can I start revenue recognition framework, etc. So these are my point is, this is, as you can see, these are exactly the same questions in various parts of your syllabus: segment reporting, revenue recognition, financial instruments, etc., where the institute is asking you the question and then at the end they're saying advise the steps to automate the process. Everywhere they're asking advise the step to automate the process. What are the steps to automate the process? Everywhere you see the same thing. So basically my point is, the answers would have a broadly repetitive trend. So what do you need to do? So I have kind of come down to broadly 4 main things over here for these types of questions and a few keywords that you can possibly use. So if these are questions in technology which are linked to automation, see, if it's an MCQ there's no problem, but if it is a question linked to technology where you need to automate the process, like question 3 all the way up to question 6, then what are the things that you have to remember? First, you need to be able to develop a system which is able to extract the relevant data. Now the relevant data can be extracted manually or through an automated process into files like an Excel file, or you can use barcoding or QR codes. This is called as OCR technology, optical character recognition. So you can use this technology, you can do things like machine learning. So we have mentioned a few keywords over here. So if you see the solutions for any of these questions, the first 2 or 3 points would be revolving around the fact that, okay, you need to teach the system how to extract and organize the relevant data. This can be extracted and organized into an Excel file, into a Google Sheet, into let us say any kind of software using OCR technology, optical character recognition. You can use these words, or using a machine learning kind of a neuro-linguistic programming kind of a thing. So this is the first part where you are trying to identify and extract the relevant data. First 1 or 2 points in every question is linked to that. If you are not able to reproduce more points, don't worry. You can frame a bigger point where you're trying to explain the fact that in each cases, how do you extract the relevant data? But again, remember, you're trying to do process automation, and as a result, merely extracting data will not work. You will have to keep it generally in a machine understandable way. So you will have to set parameters or rules and codify it. Codify means you can set, the word you can use over here is Boolean values. Boolean values are 0 and 1, like binary numbers in a machine. A machine understands 0 and 1 quite well. So over here we say that we'll define the parameters and rules and kind of codify them. So over here the word you can use over here is something like a Boolean values. So if a contract is, if certain rules are met, it is net settlement, that is 0. If certain rules are not met, it is gross settlement 1, and so on. And then ultimately you can set up scores to figure out and define predefined rules. So second is you define parameters and rules and codify the data, like using Boolean numbers, etc., for codifying and developing scores, etc. Third is where you use a lot of tools which are available in the market, softwares and automation tools. Algorithms can be used. You can use, let us say, workflow automation tools. You can use automation tools in general. So we have said automated analysis, workflow automation tools, etc., can be used for the purpose of automating this data and throwing out a conclusion. So the last step would be you will review and analyze the outcome and reach a decision. So a system will have 4 things. People will probably have data. So like in a store, at the point of sale, they will punch in the data either manually or using the OCR technology. Then that data would be by the system codified based on the set rules and parameters, and depending on certain rules, algorithms that you have set up, that system will detect what is this contract. Is it a gross settlement contract, net settlement contract? Are these 2 different segments? Is this a part or aggregation of a single segment, etc.? and then it will reach a particular conclusion. There has to be a check measure to kind of review that as well. So if I look at any random question, let us say question number 3 over here, you will see almost the same thing. First, identify relevant data fields, export into a compatible format, clear the data. Point 6 says define rules or criteria, apply the rules using Excel formulas, or you can use Boolean values, Excel formulas, then use appropriate labels to figure out whether the conduct is a derivative or not. In question 4, similar thing. Again, analyze the clauses. Each clause should be codified, Boolean values to be attached, define the criteria, use automatic algorithm, etc. So if you keep on reading this, you will kind of go in loops and circles. If you try to have a standardized template whereby you can actually use your broad knowledge and kind of answer it, it would probably be helpful. Even if you look at question number 5, almost similar thing, extract the relevant data. I mean, they could have used similar things, but they've actually used a few fancy words here and there. So that ways, define the criteria, consider the factors, use automated tools, define algorithms, etc. Document the rationale, use tools for presenting the data, etc. So I hope you have at least got a brief idea. My objective was to complete this and discuss broad things. So even if you are thinking of leaving it, hopefully you don't, and spend a few minutes over here, and at least probably if something comes up, you can apply this. So in your RTPs for technology, or in your MTPs more, I mean, if I look at it as a proxy for the exam, over here for technology, in your MTPs, you have had 2 MCQs. So these are the 2 MCQs. In both the MTPs, you don't have a descriptive section on the technology. You have some AI related question on why the AI is helpful, and what will happen in case of usage of an optical character recognition technology, what does it does not avoid, etc. So 2 basic MCQs, you can just review that if you have not done that earlier. But no descriptive questions on technology. My sense is there could be a descriptive question where you are asked to write a short note and identify a few features. Next is ethics. Now at this stage you would have done a lot of ethics in auditing. So the theory part over there, I'll just discuss the brief theory so that you are broadly aware of what is there in the chapter. But more importantly, this is a sum which will definitely come in the descriptive section, I'm reasonably certain, and this will use your index, so do not leave this. So in this we will first discuss the broad parameters of ethics, though the detailed working in ethics, if you have done in audit, that's absolutely fine. What you need to understand better over here is the type of questions that have been asked and what is the standard template that you should answer, what are the standard things that can go in answering, and I think we should be good. So over here, for ethical duty of a chartered accountant, there are 3 things. First is the Code of Ethics. Second is the Chartered Accountant Acts, the CA Act, and our Council Guidelines. So when you look at the misconduct as defined in our section 22 of the CA Act, there can be professional or other misconduct. There are 2 or 3 schedules over here. In the first schedule, the first 3 parts, and in the second schedule, the first 2 parts pertain to professional misconduct, whereas the last parts, that is the 4th part in the first schedule and the 3rd part in the second schedule, pertain to misconduct under other, that is non-professional activities as well. Okay. Next, when you look at the Code of Ethics, the Code of Ethics, it is our responsibility to comply with the code, our responsibility to discharge it to our employer, to the client, to the public interest at large. The 5 fundamental principles, and this is quite important, this is recycled in almost every question. The 5 fundamental principles over here would involve integrity, that is, you keep your honesty, etc. of paramount things, so integrity. Second is objectivity, so you don't get influenced maybe because of the relation, etc. Objectivity. Third is professional competence. You should be aware, you should be competent enough. If you are giving a valuation report, you should know valuation methods, etc. There should be professional competence, you should be updated. Fourth is confidentiality. You should not disclose privileged data to third parties unless it is required by regulatory requirement. And last is your professional behavior should depict that you are not grossly negligent and you take due diligence while discharging your objectives. So the things of integrity, objectivity, professional competence comes in almost every solution. In every solution we'll discuss, there will be an ethical consideration which will involve 1 or 2 of these 3 things. So ensure that you kind of read and understand that properly. Conceptual framework is there, and this is to identify and evaluate and address threats to compliance of the the fundamental principles, where if you want to evaluate that if there's a threat in application, there are two tests that have been given. First is you will exercise professional judgment, and if you believe that there's a threat, you can consult with the institute, the legal fraternity, your peers, etc. Or you use a third party test. A third party test would mean if there's a reasonable third party, would a reasonable third party, considering a similar data, would that third party think that you are acting in an objective manner? If yes, then there's no threat, but if no, then there is a possible threat. Okay, then there are a few schedules, like data is given regarding the first schedule, second schedule, a lot of clauses which are there, an institute over here, and there is also a council guideline. Most of the solutions pertain to one clause in the council guidelines, that is appendix 34 to the CA Act, and is if an employee or a professional shall exercise due diligence and shall not be grossly negligent. So one of the institute council guidelines mentions, which has been used a lot in your solutions, is that an employee or even a professional should exercise due care and should not be grossly negligent in performing their duties. Okay, so there is a lot of data regarding, I think you would have done this in your ethics. I'm not kind of discussing that in your audit again. So various clauses, they have given you around 10 clauses in part 1 of the second schedule, an extract of the 4 clauses in the part 2 and 1 clause in the part 3. So we will just look at which of the clauses institute mostly answers. Mostly they look at clause 1. This is the most important clause that they use. Clause 1 of part 2 of the second schedule. So they say if this clause says one should not contravene any provisions of the Act or regulations made thereunder and any guidelines instituted by the council. So one of the council guidelines are you should not be negligent in your duties, and if you are negligent in your duties, that is you don't apply the correct accounting treatment, that is a violation of clause 1 to part 2 of the second schedule. One of the most common places in all the 10-12 questions that are there in the study material is this. The other common things over here are clause 5, 6, 7, 8, where you fail to disclose a material fact that you are aware, or you fail to report a misstatement that is happening, or you don't exercise sufficient care and are grossly negligent. This is for a practicing member. I think this is for CAs in practice, whereas this is CAs who are members of the institute generally. So generally, if you are a practicing CA and you are doing a gross negligence, then for a practicing CA, when you write an answer, your answer would usually look at clause 7 of part 1 to the second schedule. However, if you are a CA in employment, your most of the answers will be clause 1 of part 2 of the second schedule. So these are the 1 or 2 things that you should kind of use when you are reproducing your answers. Okay, then there are certain ethical considerations for CAs, which is if there is a conflict of interest. The first challenge is how do you identify the conflicts of interest, and if you have identified it, how do you showcase it, like or how should you address it, like should you withdraw from the assignment, should you give a disclosure, etc. Second is preparation and presentation of statements. You should ensure that the statements are within the accounting and regulatory framework. No misstatement or misleading accounting should happen, and you should apply reasonable professional judgment while applying that. Sometimes if you have to rely on the work of others, you should ensure that the others are discharging their work in the proper way as well. Acting with sufficient expertise, you should not mislead on what you are knowing, your level of expertise. You should be fair and transparent in that regard. If required, you will seek professional assistance, you will seek sufficient time for the purpose of discharging your obligations, and if need be, you will even decline the assignment if you are not competent enough. Then financial interest, compensation, etc. You should ensure that your financial interests do not result in you having an incentive to manipulate. Like if you are a CA in employment and a CFO, and let's say the director's compensation is linked to a percentage of the profit, you should ensure that that thing should not let you affect your discharging of ethical considerations. Inducement and gifts, you should be alert on even receiving or giving gifts. If you think that that gift can to you or your family member can possibly affect your objectivity, you should politely decline that gift. Okay, so हम तो gift decline नहीं करते, but let us say at least while writing in your answers you should be and you should even in practice be objective enough to that. So responding to non-compliance, well, if you see that there's a non-compliance and you're a junior chartered accountant, you will highlight it to your supervisor, if not to a senior chartered accountant, if not to the appropriate body in your organization, or even to a regulator or the institute, as a case may be. You will escalate it as required. And there can be a lot of pressures that can be put on you, that you might be kind of you might be fired from the job. There will be a lot of threats, but in general, at least from the exam perspective, when you're writing the solution, you should be able to withstand all that pressure and ensure that your responsibility, your ethical considerations come first. Not merely, it's a big thing, but even if you're going to be fired from the job, that does not mean that you, under that threat, you allow a wrong reporting to happen. No matter how big that threat is, you will ensure that you stick to your ethical grounds, is what you are going to do. There is a lot of descriptive guidance we have given at the end for outlining all of this. So this is a broad theory, and if you go to the questions and answers for ethics, over here the questions are a lot more Ind AS based. So there would be a treatment which would be given, and the standard way in which these questions are framed. We'll discuss a few questions as well for your understanding. The standard way in which these questions are framed is, there would be a situation which is created and an appropriate treatment as per Ind AS. You should be aware. They will not tell you. You should be aware, and the CFO or someone in the company will probably maybe not do that right treatment. So how do you go about answering these questions? Typically, as we see over here, I've just outlined 4 things along with keywords that you should be following in a typical ethics question. First thing is, you look at the appropriate accounting treatment for which your knowledge of Ind AS will be imperative. So if it's a 4-mark question, approximately 1 to 2 marks will be dedicated in you having the ability to understand what is the appropriate accounting treatment. Like you will do a sum over here where you will be told that as per Ind AS 19, if there is a particular past service cost or a gain or loss due to curtailment, etc., you will take it to other comprehensive income. You don't want to take it to P&L, but you will say that is wrong. It is only actual gains or losses can go to other comprehensive income. Otherwise, you will have to take it to the profit and loss account. Or there might be a question where you have to meet a particular debt to equity ratio, and if you are going to take an asset on lease, on a 5-year lease, there will be a lease liability which will affect your debt to equity. So you might say, okay, chalo ek kaam karte, we will structure it as 11-month leases with renewal options, and we will renew. So it's a short-term lease, so that you don't have to show the lease liability. But yeah, that is against the substance of the arrangement. Or you might have considerations where you might want to recognize a particular amount as a revenue, whereas Ind AS 115 does not allow it to be recognized as a revenue. But in order that you get a bonus, you want to recognize a revenue and increase a profit. Now, all of these, you will see various cases. I'll quickly discuss them as well. In all of these particular situations, the common thread over here is you will have to first understand what is the appropriate accounting treatment and mention that as per Ind AS so and so, this is your appropriate accounting treatment. Okay, however, the management wants to do some other treatment. Why? There will be some ethical considerations given to you over there, that you want more financial compensation, and as a result you are doing this. So you will kind of explain those ethical considerations over here and the ethical principles that you need to remember. Like you need to be objective, you need to ensure your integrity, apply your professional competence. So you will say that what are the ethical issues over here, the ethical considerations like objectivity, integrity, etc. And then you will suggest that what is the appropriate action to be taken. So in the first part, you will say that the treatment suggested may be correct or not as per Ind AS. Second, there might be pressure which is put on by the management on you. So there might be some ethical conflicts that, okay, this is the appropriate treatment, but if I do this, probably I will be fired. However, I need to be objective. There should be integrity. So that ethical considerations, you need to be able to jot down. Few things like objectivity, integrity, pressure applied by the management, conflict of interest is what you are going to use over here in the second part of the solution. The third part is you will say that what should be the appropriate treatment in this scenario. What should be the appropriate action taken? Whether I need to escalate it to a superior or whatever is the appropriate action to be taken. And lastly, you will say the consequence of non-compliance. If you don't take the appropriate action, then there can be, for a practicing chartered accountant, violation under usually clause 5, 6, 7 of part 1 of the second schedule, or in case of a chartered accountant in employment, typically a violation under clause 1 of part 2 to the second schedule. You can use this, and where you can say that there will be penal consequences. You don't have to outline what the penal consequence would be. You will just say that for a CA in practice or a CA in employment, there could be penal consequences under so and so clause of so and so part of so and so schedule. I hope that will broadly give you an idea. And even if you read these sums, these are good index type of sums. Like if we quickly discuss these questions, over here there's a company Infostar, and it is going to pay remuneration as a percentage of net profit. Over here Infostar sold land. If it is selling land and there is a gain, you will just recognize over here the gain on sale. That cannot technically directly affect your revenue. So you are selling the land and you are doing a lease back. So if there's a sale and lease back, in this particular case, if I'm not wrong, so over here for a consideration of 40 crores with an option to purchase, not a lease back, it's a sale with a repurchase option. So if there's a repurchase option for a 40 crore with a premium of 6%, as per Ind AS 115, though legally it is called as a sale, it is actually a loan, because this is a sale with a repurchase option, and if the repurchase option is likely to be exercised, the transaction over here is case of a loan transaction. However, if you show it as a sale, it might affect your profit, and there might be, because it affects your profit, the directors might get a higher profit, but that is wrong. So if I go to see, we will say over here that this is the appropriate accounting treatment as per 115 is that of a loan. Then you will say ethical issues. If you show it as a sale, integrity, objectivity and professional competence, you are not applying your professional knowledge and you are being dishonest. So your integrity and objectivity is going for a toss. So the appropriate action over here would be not to show it as a sale, but to show it as a loan. And the consequence of a non-compliance. Now, who are you? You have to see that. Let us say you are a CFO. On instruction of CFO, you are a CA. For you seem to be an employment, and as a result, if you don't follow, then you will be guilty under clause 1 of part 2 of the second schedule. So that is how you will address question 1. If you go to question number 2, what is happening? Again, there is a company. Here there is a present obligation to dismantle the oil rig. Okay, so as per the Ind AS, you should create a provision for site restoration. Okay, so there is some amount also given. So the directors of Rustam are aware of the requirements of Ind AS 37 with Ind AS 16. However, they propose to expense the cost as and when incurred. Now that is incorrect. That is wrong accounting treatment. With no entries or disclosure in the latest financial statements, they argue that the application of Ind AS involves judgment. So over here, first is the appropriate accounting treatment. There should be PP account debit to provision. You should create them. The ethical considerations over here, maybe a CA is forced to act by the directors in a particular way, but that will affect his integrity, objectivity, and again professional competence. So you should ensure that the statements are true and fair. So this appropriate action, you should ensure, you should coax the directors not to do something wrong that is against their duties, and consequences of non-compliance. Now over here, if the directors are forcing a chartered accountant who is in practice to sign a report, now if they will sign the report, they will allow representing something which is not factually correct, and hence there would be a violation under clause 5, clause 6 and clause 7. Sir, but earlier you were doing regarding part 2. Well, part 2 is if you are in employment, part 1 is if you are in practice. That is what you have to kind of remember. When you look at question number 3, over here what is happening is, you are again planning to take a loan from a bank, and for that you are required to project strong cash flows. Now the current projected cash flows are not as good. So we are telling an employee to kind of, or a practicing CA, to present the cash flows in such a way, your forecast here, you give whatever forecast to the bank, in such a way we get a loan. So over here, directors have told the bank that the company is in an excellent position, and the chartered accountant has recently joined Alap. So you are an employee and has openly stated he cannot afford to lose the job. So there is a conflict. For that employee, the directors are pressurizing to make the forecast, which are window dressing you are doing so that you get the loan. However, they don't really they are not correct. So even if the CA is worried, so if you look at the ethical considerations or conflicts over here, you are conflicted because you want to raise money but not ethical consideration should tell you that that should not be on wrong terms. By not giving wrong forecast, that will affect the long term reputation of the company. As an employee, you are again conflicted because you don't want to lose your job. So but as a CA, you should look at his objectivity, he should look at his integrity and his competence, and try to tell the directors that this is not how you try to obtain the loan. Maybe we can find some alternative ways. Ye apne ko gyan dena. That is the appropriate action. The CA should put the interests of the company and professional ethics first. And if he does not, the consequence of that, again, you are an employee, and hence clause 1 part 2 second schedule, you will be subjected to penal consequences because you are grossly negligent, not taking due care and diligence, and hence you are violating the council guidelines. Okay. When you look at question number 4, again, this company has certain debt covenants attached. So these are some debt terms where your debt to equity cannot cross a particular limit. Operating margin has to be in a particular limit. The directors, along with the CFO, who are a CA, considering a 5-year lease arrangement. If I take a 5-year lease, that will be shown as a lease liability with a corresponding ROU asset. So what they have done is, the directors and CFO propose that the lease agreement be drafted in such a way that is 6 10-month lease agreements, so that you are not violating. You are not showing it as a lease liability. You can take the short-term lease exemption. However, as a chartered accountant who is a CFO, you should tell the directors that that is not reflecting the substance of the arrangement, and hence you are representing something which is wrong. So the appropriate arrangement as per Ind AS should be, you create a lease liability with the ROU asset. The ethical consideration will be the objective, and it's the same recycled things you see: objectivity, integrity, etc. and consequence of non-compliance. Because you are a CFO who is a chartered accountant, who is an employee, you will look at clause 1 part 2 of the second schedule as a consequence. In question number 5, you will have a company Agastya, and in this case there is a defined benefit plan which was amended. Now if this defined benefit plan is amended, then this is going to result in past service costs, etc., which has to go to the P&L. But what are the directors saying? Directors propose to change the accounting policy such that gains or losses would be recognized in OCI. But that is wrong accounting treatment. As per Ind AS 19, your correct accounting treatment will be past service costs, current service costs, interest costs, everything has to go to the P&L. It is only actual gains or losses. This is a plan amendment, not an actual gain or loss. This has to go to the P&L. Accounting policy to take OCI is not correct. So you will first mention that as per Ind AS 19, what is the appropriate treatment. Then maybe why are they doing this? Well, they are taking it to OCI so that the effects don't come in the P&L. Now that is not representing the, not showing the true presentation to the readers of the financial statements. So this would be not correct. Ethical implications, objectivity, integrity, as you see, if I have highlighted, that is the same thing that is mentioned, and you should ensure that the true and fair view is depicted. If not, if you are a consultant CA, clause 5, clause 7, etc. of the first part of the second schedule have to be seen. Next is a company spins. Again, there is some incentive as a percentage of cash flow from generation operation CFO. Now there may be a transaction which may be a CFI transaction. However, if it affects your cash flow from operations, you want to wrongly show it as a CFO. Is that correct? No, you will have to show it at the appropriate place. So over here what is happening is, you have disposed of certain equipments and investments, and this, if you are selling equipments and investments, it will be cash flow from investing. But the directors want to show this as a cash flow from operations. Is that correct? The answer is a clear no. You should not be showing it as cash flow from operations. You should show it as cash flow from investing. Sir, but we lose out the incentives. That's fine. That is not at the expense of the organization as a whole. So over here in Ind AS 7, you will show it as cash flow from investing. Ethical considerations you might have. There may be a deliberate attempt to mislead the readers, which is not correct, just for claiming those higher incentives. That is not correct. And again, if you are an employee, the violation is clause 1 part 2 of the second schedule. Professional competence, etc. is in question. Again, in question 7, you are going to get some bonus, which is a percentage of net profit. Earlier it was a percentage of cash flow, now it is a percentage of net profit. And over here you are currently showing a profit of 2 crores. So you are still entitled to some level of bonus, but the employees have been historically given discretionary bonus since the last 15 years. So there seems to be a constructive obligation. However, the CFO or the CEO over here, who's a CA, will suggest that this is discretionary. So even if we don't give to the employees, if we end up giving to the employees, then the profit will be below, let's say 2 crores, below 1 crore, and the directors will not get a incentive. So let us not give the bonus to the employees. that will have widespread impacts. So that is not illegal. However, ethically, if the employees are expecting, and this is a constructive obligation, you should give them. In fact, if the employees actually see that the directors are claiming an incentive and that is at the expense of they not getting a bonus, that can affect the company at large, and hence it will impact their overall performance and the employee morale, etc. will be impacted. Ideally, constructive obligation, if the payout is intended, should be created. If not, maybe one cannot say that there is technically a penal consequence over here because it was a constructive obligation, not a legal one, but ethically it is not correct. So here we have not mentioned the consequences of non-compliance, because here if they don't pay the bonus, no one can legally sue them because the bonus was discretionary. Then you have question number 8. Again, there's a company manufacturing spare parts. Again, there's an incentive based on operating profit margin. You have been appointed as a consultant. So over here, you are not an employee, you are a consultant. And there is a 75 lakh loan given to the director. This loan is repayable on demand. So we are saying that whenever we want, we can recover the money back from the director. So let me show it as a cash and cash equivalent. Is that correct? No, that is definitely not. This loan given to director by no means is a cash and cash equivalent. Sir, but it is loan repayable on demand. But what if the director does not have enough money to pay this? In which case, to show it as a cash equivalent is absolutely wrong. So over here, it is a financial asset and not a cash equivalent. It is violating Ind AS 7 if you show it as a cash equivalent. That is wrong. Ethically, you might say, if you allow this to be shown, this is affecting your objective integrity as well as your professional competence. So over here, as you can see, there may be pressure on you, but you should be able to withstand the pressure and not go for a wrong accounting treatment. And if you do, as a consultant, there will be penal consequences under clause 7 as well as clause 6 of the first part, because you are a practicing entity. In the next question, again you have plans to dispose of 75% subsidiary. This was reported. This is, I think, similar to a question. I think both of the MTP questions, I've just compiled them, but both MTP questions. This is a question which is very similar to what has come in the MTP. And earlier, one of those lease questions was also similar to what has come in the first part of the MTP. So the MT questions have kind of recycled. For RTP, there's one question which we have recorded a video separately as well. If possible, we'll discuss that right now also. So over here, you are planning to dispose of 75% subsidiary. Now, in this case, this was reported in the media as well. There are a lot of things. Those things expected to have substantial trading losses, etc. Now, we have to see whether this is classified as held for sale or not. And then there are a few data points which are given where you have been told that what should be the accounting treatment to be adopted to address the above issue. This is there in the MTP as well, I think in the second series. So over here, you will look at the data and see whether it meets the condition as held for sale. And in my opinion, it does meets. So over here, it is classified as held for sale. And hence, you should show it carrying value less fair value less cost to sell. Further, since you are closing and selling a subsidiary, there can be even a constructive obligation, and hence a provision should be created as per Ind AS 37, a provision for restructuring. So over here, impairment loss on PP will in any case go as per Ind AS 36. Redundancy costs will be taken as a part of your provision for restructuring. Various legal costs will also go as a provision for restructuring, but future trading losses as per Ind AS 105 are not a part of, or 10 as per Ind AS 37 are not a part of your provision for provision for restructuring, and hence you will create a provision for restructuring to the extent of 5.5 crores, that is 4 plus 1.5. Separate impairment of 7 will be recorded, and this will be shown as a held for sale item. So these are the things. So ethical issues over here, if you go to see, you have been told that the CEO is concerned that this may affect the sales and surely bonus targets of not being met. So he's saying, let us not create this provision, etc. That is wrong. That is going to affect the integrity, professional competence, etc. The same thing, it is happening with the COO, and hence clause 1 part 2 of the second schedule. So this is a good question which has even come in the MTP, and because there is Ind AS 105, Ind AS 36, Ind AS 37, and also ethical consideration, something which can possibly come and has also come in the MTP. Mind you, even if you see the MTP, it's a 4-mark question. One can say that, do I need to write all of this literature? No. Do you think even if you write this in for 4 marks, all of this literature, you will not be able to complete the paper and you will lose a lot more. So don't worry about writing so much literature which is printed in the RTP or the study material. You use your basic understanding, apply those 3 or 4 steps and get your answer, and I'm absolutely sure you will get credit for that. Okay. And the last question number 10, at least over here, now there is a company who wants to upgrade its production process, but they don't. On 1st April, the company entered into a property lease in order to obtain tax benefits, but they don't want to show a lease asset or a lease liability. However, when you go to see, now there is a CA, there is an MBA, and MBA is saying that why should I show? We'll say that you are MBA, we are CA, let us do our thing. So a chartered accountant will review and they are making a loan application. The MBA, who is probably the CEO, is pressurizing that you don't have to show this as an asset, not to be shown as a liability because it can affect our financing, etc. things. We will say that okay, the appropriate treatment over here is to create a lease liability and an ROU asset. Not recognizing this would be a violation of Ind AS 116. There may be certain threats, but you should keep your principles up, uphold your principles of objectivity, integrity and competence, and not be under the pressure even if that affects your bonus or your job. If you don't, then there may be over here penal consequences because you're an employee under clause 1 part 1 of schedule 2, as we can see over here. So this kind of takes care of the questions. I hope you get a broad idea. We have kind of discussed them. There's also the questions that you see in the MTP, like this question number 3. This is an RTP question. If you look at the MTP question, this is Sunshine, which was having debt covenants, was considering a fresh 5-year lease, making into 6-10 month leases. This was incorrect, right? So we said that okay, our ethical consideration should be based on the substance of the transaction. So this was the MTB question. As you see, a descriptive question. Another question, question number 5, similar to what we just discussed over here, where you had these I think question number 9, where you had the provision for restructuring held for sale, which is the MTP questions for around 5 marks, which will possibly come. There is also an RTP question over here, where there is a company which is operating in the fiber optic sector. There is a lot of data given. Ultimately, the thing over here is you have an equipment that you can sell. It is completely ready. The customer's factory is next door, but you have not sold it. You have not actually delivered it. As per 115, the revenue should be recognized at a point of time, and that point of time should be when you actually make the sale. If you read this entire question, you have not actually delivered it, but you are saying that it is next door, so we can deliver it. But as per 115, till the time you actually deliver it, you cannot say that this is considered to be a revenue. However, you want to take bonus, etc., and hence you are saying that okay, I am open showing this as revenue. Is that correct? No, ethically wrong. Again, the same objectivity, integrity, professional consequences. If you are an employee who is doing that, then there is a violation under clause 1 part 2 of the second schedule, and accordingly this kind of takes care of your discussion. We have also given a separate RTP video for the entire RTP, and hopefully you will be able to apply that. So this kind of does a very quick fire concept question, all full revision, and more importantly applying those standard steps in an exam question if it lands up. So even if you have not studied this, if you know Ind AS, you can say the appropriate accounting treatment, and ethically you can say ethical considerations can be of objectivity, integrity, professional competence, conflict of interest, proper presentation, etc. And based on that, appropriate action almost always will be to uphold ethical considerations irrespective of the pressure, and then appropriate action will depend on whether you are an employee or a practicing consultant. If you are an employee, part 2 clause 1 of second schedule. If you are a consultant, clause 5, 6, 7, generally 7 of the second schedule, part 1. So I hope this video has been helpful to you. Please don't skip this chapter, and if you have at least survived till the end of this video, hopefully even if a question comes, you should be able to address. I'll leave it at there. Thank you very much for your time and efforts, and just study really hard, give it the best shot, be positive, be confident, and I'm sure you are going to score the exemption grade and above for these exams. Okay, bye bye, take care and good luck.